what's going to happen, in my opinion, is the halving is going to occur. The fair value is going to increase because that's what happens when the halving occurs. The fair value goes up because the price needs to adjust to support the miners. Now, in this cycle, the fair value probably doesn't go up as much as previous cycles because we have this pre-halving event of the ETF, which boosted the price closer to fair value so that most of the miners are doing okay right now. But the fair value is probably going to go up to, call it, 75-ish K would be my estimate. In a normal cycle, then the leverage comes in and it pushes that to 2.3, 2.4 times. Well, there's not as much leverage now because, they got rid of CZ at Binance, so that's not as much leverage. And they got rid of some of the old bad actors in terms of the leveraged lenders. So let's say we only go up 2 times fair value this time. So we go to 150-ish. Okay, well then what happens? Well then when you're so far above fair value, that's when the short sellers are come in and some of the people will say, okay, that's good enough for me. I'll take a little profit. And then we start to go down.
Traditionally, the fair value of Bitcoin increases after a halving because the price needs to adjust to support the miners. However, in this current cycle, Morgan Creek Capital CEO Mark Yusko believes that the fair value will not increase as much as in previous cycles due to the pre-halving boost from the Bitcoin ETFs. In one of his recent interviews, the CEO shares his updated analysis of Bitcoin's performance from the months following the halving up to the year 2025. During this period, Mark Yusko predicted that Bitcoin's value would range from $75,000 to $150,000. Let us now view clips of the interview as Yusko explains the exact reasons behind his bullish predictions. While watching, please give this video a thumbs up, subscribe to the channel, and enable post notifications for more similar content. Make sure to stay until the end of the video, where Mark Yusko reveals the truth about who the Bitcoin ETFs were made for. We hope you enjoy it.
So how far down do we go this time? To your point, if somebody bought in today at 68, 69, whatever, and it's 150, they might not sell right away.
Then, they won't.
But you and I both know there are a whole bunch of people who are like, I'm going to wait for a pullback. And then it's going to go up some more. And they're going to be, I'm going to wait for a pullback. And then it's going to go up some more. And when it gets to 110, they're going to be like, okay, I'm in. Well, then if it goes to 150, they're like, oh, this is awesome. But as it starts to roll over in the next bear market, which I think happens, at the end of 25, so the volatility is here to stay, right? Amazon, 28 years into being a public company, still has very high volatility. Every single year, right, including this year, it's had a double-digit drawdown. And that happens. That's just the law of large numbers, right? If I have a small dollar value, like I have $100 and I put in another couple $100, the volatility is going to get really high. If I have $1 million and I add a few $100, there's no volatility at all. So as increasing volumes come in, but the market cap gets bigger, the volatility will shrink. But it's never going to be a stable coin, I don't, because volatility is an indication, uncertainty, or disagreement about the future. There's more volatility because we don't know. Right? When Amazon started, people thought, that's a dumb idea. I don't want to buy stuff on the internet. I don't want to put my credit card on the internet. Today, you do it without even thinking about it. Same thing with Bitcoin. In the early days, you're like, I don't want that. Today, I get it. It's a perfect store of value. It's a better form of money. And over time, that uncertainty about the outcome will diminish. And so the question is, are the days of 80% drawdowns over? Well, the first cycle drawdown was 84. Second was 84. This last one was 77. I think this next one likely is a little bit less. Why? Well, because I think the upside of this cycle will be less too. If you go back to each of the previous halving cycles, we had these big run-ups. Went to 2.3, 2.4 times the fair value. Well, why would anything trade above fair value? Well, humans are going to human. Humans, mostly they can't do math, to our conversation earlier. But then secondly, they FOMO, right? They see something moving and they got to get in. So the price goes up above fair value.
Right.
But then what happens is leverage comes in, and the gamblers and the speculators come in, and that pushes the price way above fair value. But at some point, gravity takes over and you head back toward fair value, and you usually crash right through. And then you get to a washed out, really undervalued, because you got margin calls and you got the unraveling.
Before we proceed with Mark Yusko's expert insights, here is another piece of the latest news. Arthur Hayes, former CEO of BitMEX, predicts that Bitcoin may face selling pressure before and after the upcoming halving event on April 20th, despite the bullish sentiment surrounding it. In his recent blog post titled Heatwave, Hayes suggests that the widespread belief in the positive effects of halving could lead to a market correction. He points out that previous halving events have been followed by significant price rallies, but this time, the narrative might not play out as expected. Hayes highlights factors such as US tax payments due on April 15th and the Federal Reserve's quantitative tightening policies, which could tighten dollar liquidity and trigger risk aversion, leading to a potential sell-off of crypto assets around the halving. He emphasizes that the timing of the halving coinciding with tighter dollar liquidity could exacerbate the situation. With that, let us now return to Mark Yusko's interview as he discusses the current market surrounding the Bitcoin ETFs.
I actually never felt that the ETF was for the big institutions, right? It doesn't mean that they wouldn't use it, but ETF
it's a retail. It's a retail product.
Yeah, it's for the individual investor, and really what it was for was not the Robinhood crowd and not the meme coin traders and the day traders. It was for, again, it's a boomer wrapper. It's for the boomers whose money has been kind of abdicated to a financial advisor, and the financial advisor works at one of these big platforms, UBS, Merrill Lynch, etc. And that total dollars is about 30 odd trillion. It's a lot. And I kept saying that, look, once the ETF was approved, at a bare minimum, right away, 10 basis points was going in. So that's, about $30 billion. And we've had about half of that so far. It's pretty good in whatever it's been, 10, 12 weeks. And so that's pretty amazing. Now, 10 basis points is not where it's going to stay, because Fidelity already said 1 to 3% in their kind of fund of funds ETF that allocates to other ETFs. They said 1 to 3. And I think all these other places are going to say, 1%, that's a good number. That's a good diversifier. Well, 1% of 30 trillion is 300 billion. That's more money than has ever gone into Bitcoin since day one.
Yep.
Just let that sink in for a second. 300 billion is more fiat than has ever been converted into Bitcoin. And yes, Bitcoin's market cap today is 1.3 trillion, but 1.3 trillion didn't go in. It was a very small fraction of that, somewhere in the 200 something billion dollars. And the rest is appreciation, because every time money goes in, it's, to your point, 7,300 Bitcoin demanded and only 900 produced. Well, where's the other Bitcoin come from?
That's a big
Holders.
shift on the...
And the only way a holder sells is if the price moves.
That's right.
That's how markets work, right? Everybody's always, I love when people say, there's more buyers than sellers.
Same
No,
amount.
there's not. It's the same amount. There's always the same number of buyers and sellers. Now, the incremental dollar can come from buyers or sellers, but that incremental, like if you're a short seller and you're trying to sell something that's overpriced, then in order for you to buy it back, you want the price to fall, right? That's
right.
what you're expecting. If you're long, you're long an asset, and someone wants to buy it from you, the only way they're going to get it is if they offer you more than you think it's worth. And so that incremental pressure, but once the transaction occurs, the number of buyers and sellers are exactly the same.
In other news, while cryptocurrency trading is prohibited in mainland China, offshore Chinese financial institutions are actively engaging in crypto asset development in Hong Kong. The Bitcoin exchange-traded funds are expected to launch in Hong Kong this month, potentially making it Asia's pioneer city in offering these popular investment vehicles. Regulatory approval announcements are expected as early as next week, indicating a faster timeline than industry projections. Regulators have accelerated the approval process, likely motivated by Hong Kong's desire to enhance its financial hub status amidst pandemic restrictions and economic challenges. Several mainland Chinese and Hong Kong asset managers, including China Asset Management, Harvest Fund Management, and Bosera Asset Management, have applied to launch these ETFs. The city previously approved ETFs for cryptocurrency futures in late 2022, with the CSOP Bitcoin Futures ETF witnessing significant growth in assets under management. Additionally, Hong Kong-based Value Partners is exploring the launch of their very own spot Bitcoin ETF. That being said, this development could mark a great milestone for Bitcoin and other cryptocurrencies, potentially leading to a gradual expansion of adoption throughout Asia, and ultimately contributing to global adoption. What are your thoughts on Mark Yusko's analysis of Bitcoin's performance post-halving? Do you agree with his predictions? Are you optimistic about the future of cryptocurrency adoption around the world? Share your thoughts in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.